Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Let's dig in and take a look at the Bitcoin pump. We are currently over 40,000, roughly 40,000.4K. So that's exciting. Let's dive in and take a look at some interesting charts and see if this is sustainable. Get my charts ready on this side here. All right. So here we have the 8-hour chart and trading view, and we were trending in this horizontal. Let me get my highlighter up for you. We were trending inside this horizontal channel here, like that, and then we got this pump. Why did this pump happen? Well, Amazon came in with crazy earnings, and they shot up by like over 15%. So that's exciting for them. So let's take a look at that chart. Let me see here. Let me get that chart for you. So here we go. You can see Amazon right now currently is 13.23. But what's interesting is, Microsoft is green, and I'll cover this in the market news later. But I just want to give you a sense of what's going on in the market. The market is spotty. It's mostly red. So that news about Amazon, yeah, it's going to create a pump. Job report came out today, and it was extremely positive. But job market would have, if it's positive on the job market report, that would mean that the it would mean that the government's going to raise rates even faster or harder because the economy is looking good. So I think this pump is mainly due to Amazon, and so we got to be really careful about this pump. Let me get this camera situated again here, and I'll show you more. And that chart right there, this chart right here, this is the stock markets on TradingView at a 30-minute time frame. You can see the pump here. You look at what's interesting here. You see the 10-year bonds. It's dropped significantly right before the market opened. Like huge drop, like huge. Look at that. I haven't seen that in a long time. The Dixie was rising before the market opened, and then it dropped. So these two combinations right here, and the investor poured their money into Bitcoin. But look at the rest of the market. Here is Invesco QQQ Nasdaq. In the last 24 hours, it's been turning down. Market open and turned up slightly, and then down, and then now it's kind of evening out. On the S&P 500, turned it down all day yesterday, turned it down right here after market open, and finally turned it back up. Same thing with the Dow. Turned it down all day yesterday, with the exception of this point here at the beginning of the near the market opening, and then after the market opened today, turn it down. So that leads me to believe that this current move is not sustainable, and it's going to come crashing down. And me show you some other ones here. Let me close some of these windows, and then I'll bring us back to some other charts. Yeah, let's look at the heat map. So looking at the heat map here, you can see this is yesterday, right? It's got a little trendy. It moved up slightly, but it's overall pretty organic, except for this little guy here. That was 800 BTC. But then right here, you see all these buy orders. These are huge. Like, let me see here. That's 1,072. These are grouped together. This is an aggregated heat map from bookmap.com. You can see this rally up, and let's look at this one. This one is 1,514 BTCs. So huge orders here. Let's take a look at the CVD for this. CVD is trending horizontal and then just spikes. When it spikes like this, it's not sustainable. I hate to tell you that, but I want you to be prepared. So let's move that out of the way, and let's move this back here. This is the liquidation levels map from High Block Capital. And yesterday, I shared a similar chart before this rise. I said there's a probability that price will go up to liquidate the shorts, and it did. So here is my new diagram from this chart. Currently, there is an excess of $6.1 billion that just built up in potential high leverage longs to get liquidated. This is just Binance alone. And those levels right here just came in. Right here, these levels, right around from here to up here. Or maybe, all the way down here. They started coming in right here. So all right here, right there in this zone, they started coming in. So all these are new. And so where does price go? Price go where money can be made. And so with all that liquidation coming up, all this build up with long liquidation levels, it's gonna more than likely move back down. So let's go back to this chart. I drew in another pattern that appeared as soon as this popped up. So you can see here, there's a bearish flag here. This is the pole. Here's the flag pattern, and on a bearish flag, it tends to move similar to the pole. So I moved the pole over here. So here it hit the top of the bear flag resistance, and this is the bear flag support level. Chances are it's going to bounce off this level, come back down right into this horizontal channel near the bear flag support. At minimum, that's what I would do. And you can see on the Bollinger Band, I'm not sure if you can see this, but it's crushing the top of the Bollinger Band and just made it open wider. Down below here, you can see that the KDJ, the J line went almost straight up. All three lines up fanning out. But guess what? It's near the top. Here's the recent top right there. It's near the top. What's going to do is probably come up a little bit more, round off, and come back down. On the MACD, you can see here that it was, coming together. The white MACD line was coming together with the red signal line, and at the 0 point, and then because of this move, the white line, MACD line, is now above it, and it's going to stay above because it's a lagging indicator. So we'll print some more white bars here, and then it'll round off and probably come back down when this price change. It might take a little bit of time. It might consolidate a little bit before it drops back down, but it surely will drop back down because there's just so much money to be made for it to drop down. Down here at the RSI, the red RSI line, the aqua CVD line, and the white momentum in a line, they're all fanning up, but I bet you anything they're gonna round off and come go flat slightly and then come back down. So yes, it looks very bullish right now, and I'm super happy for that. But from a sustainable point of view, it's not going to be sustainable because the tech market is still, the stock market is still not pumping like this. Remember the correlation between the two, and the move from Bitcoin up just does not. It's not in proportion with the Dixie moving down. It is in proportion with the 10-year U.S. bonds market, sure, but that can quickly change. It's just the DIX has a stronger negative correlation than the bonds market, and the tech sector, Bitcoin correlation to the Nasdaq and the QQQ or the S&P 500, it's stronger. So when those things break, you got to be very careful. So my bet is that it will move down, at least into this zone in the near term. It might consolidate a little bit, take a breather, and then it'll come back down. I hope you found this quick 8-hour Bitcoin analysis. This is the TradingView 8-hour chart. Helpful. And let's go to the outro. So please leave a comment in my YouTube channel. And if you found this incredibly helpful, smash the like, ring my bell, and hit subscribe. I'll see you in the next video later today. Peace.